All right. Good afternoon, everybody. Should be up on YouTube and the VTF. Jump right in. I'm an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FinRecipic. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. There is the position disclosure. I'm out of Unity. I'm out of Rivian. I'm into Snap. I'm into Plug. Still at UPro, Teachable Q. My options gambling is not working out for me. It's all right. They're very small. It's all very small because it's pure gambles into earnings with Meta, which is failing. That one's basically done. Microsoft, which still has a chance tomorrow if the market wants to sell off to make it so I don't lose anything on it. And this Roku is looking shot unless they say something really bad on the earnings report for my puts. I was just about getting into the money on them, but Roku's report is excellent. So is Intel's. They're both really solid, and that helps to negate the bear thesis. You know, the bear thesis for me coming into this market, and it's a multi-part thesis, but one of those parts is having such a big run. If these companies can't absolutely demolish earnings expectations, then they're setting themselves up for failure and for big sell-offs. But I'm seeing a lot of companies report really good earnings reports once again this earnings season. You know, it started with Netflix and Tesla reporting mediocre reports, which I thought was confirming my thesis. But there's been zero consistency since then. Microsoft traded down a little bit, but not really that much off of a mediocre report. Meta absolutely crushed it. Google was great. Roku here crushed it. Intel's numbers, I don't really trade Intel too much. Intel crushed it. Um, so that's definitely one piece of information that's against the bear thesis. But at the same time as that, we got a pretty serious push through failure on the market. So let's take a look at that. How do we close today? The SPY here is down 0.5%. That includes any action since the market closed. I think we bounced a little bit since the close. SPY here is down 0.5%. Qs are also bouncing a bit after the close, but still negative on the day, down 0.12%, and that's despite how big Meta gapped up today. And the IWM got smoked. Russell's down 1.25%, and that's also including a little bit of a bounce since the market closed. I mean, we were able to see it really early this morning that the breadth was horrible, that the RSP was underperforming, that the IWM was underperforming, and at the beginning of the day you had the Qs holding in specifically because of Meta and once again those other FANG names. But I mean, that's not something to overly lay your hat on if you are trying to be bearish on this market because it's been the theme that we've seen for really ever since we broke out at SPX $4,200 is has just been rotation, right? Every single time the IWM needs to pull back, then the Qs give a leg up. So it's not necessarily overly bearish if big tech performs and the IWM and the RSP are relatively weak. But I would say roughly in general, the IWM has been a leader. So seeing the IWM get crushed today is meaningful. And for market participants, today is also a major day to take notice of. We haven't broken our uptrend by any means in any of these indices, so the uptrend is still intact. We're still in a bullish pattern of higher highs and higher lows, but today's really a push through failure. Big red negative Maribozu candlestick on increase in volume when we were set for a potential breakaway gap this morning of a bullish pattern, right? This SPY here, and again, I've become increasingly bearish over the course of the last couple of weeks, but I've just been trying to recognize that these technicals are still very much intact. We had this really looking bullish pattern here over the course of the last 5 days. Market's been going sideways. ADMA is catching up. Today we gapped up above recent highs. We gapped up above 457 off of Meta and the day after the Fed. So today looked like it could potentially be a breakaway gap continuation day above resistance. That's with your spies. Your Qs, which have been weaker ever since Netflix and Tesla, at one point this morning looked like they were also set to negate this last candle that we called a take notice candle from the 20th, which is the Netflix Tesla day. It looked like we were gonna, be getting above this 384 to negate that candle. So that was looking like we were gonna be solidifying this next higher low off this Meta report. And the IWM, gave the inside day and up yesterday, was able to get above and close above 196, and then this morning was gapping above all recent highs. This looked like it was ready for bull flag continuation. And we just had a full failure of a trading session. Spies gapped up above the level, sold off all day, sold off down to the ADMA, ticked below it, more or less closed at it. The Qs could not stay above that 384. They sold back down also, though they're still above that recent pivot low. I think that this pivot low is a spot to pay attention to over the course of the next couple trading sessions. If the Qs start losing 347.30, we got a much bigger problem. And the IWM, back below 196 and even below that inside day low from a couple trading sessions ago, with breadth being poor and kind of average stock performance being poor. So today's definitely a day to take notice of. These companies keep trying to fight back. Good report from Roku, good report from Intel here after hours. We got Chevron, I know, tomorrow morning, a bunch of others. So the individual stocks are trying to actually help this market hold in, which really wasn't my expectation in a lot of ways on these earnings reports. But the market decided to interpret the Fed, I guess, in a bad way, and sold this market despite Meta. So I think that I think Ford reported rock. I think that they're moving based on Ford. Uh, so so I don't know. This market here just closing really weak on the day, and it makes you wonder if Meta. How did Meta close? Meta still closed up 5%. You know, they sold it from 325 intraday, 330 pre-market down to 312, but Meta's still up 5%. So you wonder where this market would have gotten taken down to if Meta didn't have a fantastic report yesterday. I mean that Meta report was just stellar. Um, and again, that's helping the market to hold up. And even despite that, we had a really weak day today. Looking at the small time frame in the market, really big gap up this morning. What do we want to do whenever we have these big gap ups? We want to be patient. We want to see what signals the market um, gives to us insofar as small time frame catch up, right? What does the I say it every single time whenever we have a big gap. What does the market look like when the ADMA catches up to price action, and how does the ADMA catch up to price action? We could immediately sell off the open down into the ADMA, maybe try to create a pivot there. We could go sideways, let the ADMA catch up. We could do a little bit of a combination of those two things, which is kind of what happened today. We could rip up initially. If that happens, it usually can't be sustained. That's actually what happened in the Qs today, and then have more of a pullback technical correction. Those are your different options. But I think that the bigger signals actually come into the market after a big gap, after the ADMA catches up. Are you getting a pivot low that you can go long off of now that equilibrium has caught up, or are we setting up for further pullback? The spies went sideways here this morning, while the Qs went directly up and the IWM went directly down. Qs went directly up for that first 3 bars plus. The IWM went directly down and price corrected very quickly into the ADMA. And I was just looking at the IWM as kind of a leader, like I usually do, more representative of your average stock. And I remember, just more anecdotally, typing up stocks like 15 minutes into the day, and I'm looking at the Qs just rip higher, and I'm looking at I'm typing up name after name after name, with the exception of some of the ones that had reported earnings, like OSTK was, tremendously strong off the open. That was on our list. But with the exception of names that had reported earnings, it seemed like almost everything I was looking at was pretty much selling down early, with the exception of, you guessed it, Apple and Nvidia and Amazon was incredibly. How did I get that first letter there? And Amazon was incredibly strong off the open. So it just seemed like, I mean, it didn't seem like it. It was the average stock kind of selling. IWM. Why am I not getting the first letter when I type IWM? Um, the market was selling off, and it was just big cap tech and, Meta going sideways in the beginning of the day and kind of digesting here for a while. That was really holding in the Nasdaq. Um, I'm trying to figure out. Also a little bit tired. It's been a long week here in Los Angeles, and the time zone's been getting to me a little bit. I'm trying to figure out how I can sort of conviction to the short side this morning. Because I'm looking at the market right now in hindsight of like, breakaway gap to the upside. Market technicals are kind of confirming everything. And I just have this amount of conviction to the short side. I was heavier to the short side today than I've been in like a long time. Was massively short the T triple Q at a certain point. I had a pretty decent position U Pro short at a certain point. I was short in that upstart. I had size in that upstart at a certain point. I really wanted to short Meta, and I talked myself out of it because I was like, you got too much short exposure on already. You don't really need to be adding a whole nother name on there. The Meta actually would have worked when I called that out. I think some of you guys took it, which is great. Um, for me, it was at least partially a carryover trade from yesterday. And I've been, trading U Pro and T Triple Q to the short side, and I've been doing really well with it. So I decided to, keep a little bit overnight anyway, despite the fact that Meta was going to be reporting. Meta obviously caused the Qs to gap up in a really big way. I just I just felt that after that Fed meeting that they were going to sell this market down. I wish I could put a better technical reason on that because I try to be very process orientated and rules based in everything that I do. And yet, to a certain degree, what I was doing was kind of defying the technicals, being, really bearish this morning when the market was kind of set for a breakaway gap. Now, there is an extension play there. That's part of what I was originally just looking at. Like when I was, adding to my U Pro short pre-market, I was like, well, I can have a game plan just based off the upside extension that's going to happen in the beginning of the day and review and look at how the market corrects through time or price off of the opening extension and create a game plan around that. And more or less the same thing for the Qs, though the Qs ripped up, not really being confirmed by a lot of other individual equities. It gave like a candle 4 5 minute RDR to the downside, which I called out, and that was a really good signal for a price correction. And again, I was communicating with you guys that I was being particularly greedy. I was looking for actually a full-on reversal. It's not usually the way that I trade. I almost never do that actually. Because what I tell people all the time is that picking absolute tops and bottoms and predicting reversals is kind of a fool's errand where it's extremely difficult to do it with consistency. What can be done consistently, I think, is finding areas where the market can give high probability of retracement off of extension. And I think that where the Qs were coming into this fourth bar with this, 5 minute RDR, which is a trade that I've been looking at a lot more over the course of the last year or so, which I've communicated with you guys. That kind of 5 minute RDR coming in with just relatively extreme extension at 9:45 a.m. for an index where you got the Qs trading at 384.70 with the ADMA at 381.60. You got $3 of extension on a 5 minute chart at 9:45 in the Qs. That's a massive amount. Um, looking for this pullback into the ADMA, which we got. And then, like I was saying before, whenever we have a big gap in any direction, that you really want to start paying close attention when you get that first touch of that ADMA on the 5 minute chart. What does the market look like? And generally, if you're bullish and you're looking for continuation, which is usually the trade that I'd be looking for in most of these situations, you want to see that pivot low come in that breaks higher. And I remember communicating with you guys because I know a bunch of people were short with me that in this 10-minute period of time here at 10:10 and 10:15, it's the same thing with the spies at 10:10, 10:15, 10:20 also, where this market had completely caught up to the ADMA. Bulls should have been staging a bounce there, and the market kind of remained heavy Like it seemed like it ran into a little bit of a wall of buying because it was a breakaway gap to the upside where the ADMA's first catching up, but sellers weren't really lifting. So that's why you got this really tight price action here for 15 minutes. I view that as bearish because what the market should be doing is it should be creating the pivot low and bouncing up and relatively quickly trying to negate this 10:05 candle, and it wasn't. So based off of that and based off the time of day, because the other situation that sometimes happens with these gaps when they're really really big is as soon as the ADMA on the 5 minute catches up, a lot of times it's 10:15 in the morning. Well, guess what? At 10:15 to 10:30 in the morning, that's when your 15-minute chart becomes significantly more important than your 5 minute chart. So, now here it is. It's 10:15. I finally got that 80 man on the 5 to catch up. If it's a momentum-based market, we can certainly go. But a normal market now at this time of the day requires a 15-minute correction. So I remember looking at this market and seeing that we couldn't bounce here, seeing the time of day and saying like, oh, and I was really more Q focused. I was like, oh, I think we could get a pull to like that 15-minute ADMA. So I said, the area between like 180, 150 and 182. And we did that. We just totally broke down super hard here on like this third candle. And we went right down to that 180, 150. And I think at 180, 150, I communicated this is a spot to book profit. This is a spot to book profit. If you're just looking for the normal counter trend trade, which 49 times that 50, that's all I'm looking for on my counter trend stuff. You could be getting all out of your position here, or getting out of the vast majority of your position and then keeping a smaller amount, um, just to see if that retracement becomes a reversal. My thought process has just kind of become so bearish on this market for a number of reasons. The earnings theme being one of them, which is actually the one that for the moment it's being proved to be a tailwind for markets, and it's actually helping hold markets up, which was not my initial expectation. But just a lot of the other stuff that's out there, you can read it in Pat's notes. Charlie, allow me to butcher his last name, McGilligod or whatever, who I super respect just from having just read his information for years now, primarily through Pat. Seeing him based on market dynamics begin to become more bearish, I find that to be extremely significant in the data that he puts behind it, especially as if volatility can begin to pick up and what happens with the systematic funds, and that's at the same time as you know everyone's beginning to become, just from a market psychology perspective, we hit a point here where everyone now finally is becoming like really bullish, and all these analysts are chasing price on every single stock. No, these analysts weren't upgrading anything at the end of last year or the beginning of this year. It's now that we're ripping higher, all these analysts are upgrading everything. Your systematic funds are at the 90 plus percentile going back 3 years. The funds that were, massively short, the hedge funds are no longer massively short. They've started to have some performance chasing. And your fear greed index that Pat likes to point to has been kind of at that max greed, which doesn't mean that you have to roll over immediately. And for what it's worth on the fundamentals, which I'm no expert when it comes to analyzing fundamentals for the market. Um, when it comes to fundamentals, it seems like some of these numbers are starting to get like pretty stretched. Like I can't quote the numbers to you guys off the top of my head, but I looked at like a bunch of the valuation metrics on Microsoft, and Microsoft's just one of my favorite companies, and it's absolute monster. It's an absolute machine, and just reported like an okay earnings report. But like, some of those numbers, the price of the stock versus the free cash flow that it's producing, and just the PE ratio. I mean, some of these numbers just seem like they're getting really really stretched. You combine that with the Fed here that's continuing to hike, which I think at this point it's become completely unnecessary. And I know that the market initially, held in pretty well with a lot of volatility, gapped up this morning. I think that gap up this morning had more to do with Meta though than it did with the Fed. And as we know, the day after a Fed day is often a trend day. So that's kind of what gave me, I think, a little bit more of the conviction also to hold the short, was the possibility that Today is actually going to be a trend day after the Fed day, but it will be to the downside. But it's being disguised initially here because the gap up is happening, and it's so big because of the Meta report. So I guess that was kind of my entire thought process coming together. Whereas normally, by the time this market pulls to a 15-minute correction on a counter trend trade, I'm like out of the entire thing for the most part. Maybe I'm holding a little bit in case that retracement becomes a reversal. In this circumstance, I think I had barely covered a quarter of my position, and my position was very large for me on a leveraged ETF to the short side in a bull market that's potentially looking at a breakaway gap. But kind of just stuck with it. Got a little bit nervous here when we kind of made a small time frame higher highs and higher lows, like we might break up, but it wasn't really being confirmed by the other indices. I was kind of just working some ranges in this area for a few hours, reshorting the bounces, covering the dips, reshorting the bounces, covering the dips. I mean, if you look at my execution chart in the Qs, you probably think I'm a crazy person. Um, but just reshorting the bounces, covering the dips, reshorting the bounces, covering the dips, reshorting the bounces, covering the dips, and then we just, you know, crashed into the close and filled the gap and went negative, which really kind of met my expectations and made T triple cube by far my best name on the day after also doing pretty well with that upstart short. So that was really kind of my thought process, my conviction on the day today. Definitely a unique trading session for me. With how I normally trade and how I'm, a real stickler for my rules, and then I kind of traded a little bit outside the box and a little bit differently today because of my thought process and my conviction, and it worked out for me. Um, I'm not even gonna necessarily say that that's the right way to trade. It's actually probably not the right way to trade. Really, the right way to trade for consistent profitability is to consistently follow your rules, and I probably deviated from that a little bit. I mean, the core of the rules was still there. Having a thought process, having a game plan. I was never uncomfortable with my risk in that T triple Q position, even when I was definitely down on it. I started shorting pre-market and then was adding after the market opened and then added on that, candle 4 5-minute RDR. So there was a point there with the Qs at highs where I was, you know, I think I'm pretty sure T Triple Q was my worst name at that point. Actually, probably by some good margin, it was my worst name. And I was never uncomfortable with the trade though, just because I had that game plan that was in place. I understood my risk, and when I got the rollover, it could have been very easy for me, and the thought process even went through my mind when my P&L began to improve after it was my worst name, and I got this full 15-minute correction. I definitely had the thought process of like, oh wow, maybe I should just be done with this. Like you're down a lot of P&L at highs, you're green in it, you caught the 15-minute retracement. Do you really want to risk a 15-minute retracement pivot low coming and leading to new highs in the index, which could absolutely happen given where the market is technically? And I decided the answer was yes. So I didn't cover any extra stock or deviate from my game plan. I kind of really went for it on the short side today and got paid. So that's good. Um, got to make up for all these puts that are gonna expire worthless on me. I'm super small on them. I'm super small on them. It was really just more about buying some puts to see if I could confirm my thesis with actual money on this earnings season coming down. But I feel like to really do that, I would have to be buying puts on every stock that's had a big run into its report, and I'm just not going to do that, especially after throwing in a little bit of money on in the garbage on now, Meta, Roku, probably, even Microsoft, probably. If I'm lucky, I can get back to like break even on that Microsoft trade if we sell off a little further tomorrow. But it was all very small experimental learning stuff because we got to keep learning in this business. Keep learning, or I don't know, go do something else. So that's all I got. I'm happy to take a look at what you guys got. Happy to answer any questions that you may have. Um, Only one I'm seeing here in the VTF for the moment is from Denver Steve. I'm curious what has caused your view to become more bearish recently, given that the technicals remain strong until today anyway. You've been mentioning it for a few days, but I'm wondering what has given you concern, and congrats on being right for at least today. Thanks, Steve. I think I covered all that kind of in my spiel there, but it's kind of a confluence of factors, that I like to pay attention to. Market dynamics, which has just become an extremely important part of my thought process. Seeing the sentiment, which has become an extremely important part of my thought process. And yes, the technicals are, very bullish, but if we can get a little bit of a pickup in vol, it's going to force enough selling, I think, to break some of these uptrends. And if you break some of these uptrends, it could lead to a pretty significant pullback. I know Brant Hirsch here in the VTF at one point mentioned that he thinks that alone could create a 10% pullback. It's too big of a call for me personally. 10% pullback is a lot, but I mean, a 5% pullback, historically you see a 5% pullback in the market every 8 months. So I mean, would it be that unusual for the market that's been on such a big run to have a 5% pullback if some earnings reports come in bad, or the market decides it doesn't like the Fed, or we've just gotten a little bit ahead of ourselves, or whatever? I think it's very reasonable, and then we have to pay attention to any sort of markets work in feedback loops, right? For a lot of people, and even to a degree for myself, from a fundamental viewpoint, would say that this market's gone too far to the upside, and it's kind of gotten a little bit away from reality. But the question that I would pose to anyone who thinks that this market's gotten away from reality is, well, over the course of the last few months here, would you rather be long or would you rather be short? With the gift of hindsight, which is 2020. I'm sure everybody here would say that they would rather be long and be making this money over the course of the last few months than shorting it just because Mike Wilson says that, the S&P belongs at 3200 or whatever. Um, but it's not to say that we should ignore those thought processes entirely. It's just that, the market doesn't move directly on fundamentals on a day-to-day basis. Big enough of a picture in the long run, sure. Sure it does, but not on a day-to-day basis. Whose quote was it? Is it a Charlie Munger quote that says that the market in the short run is a voting machine and the long run's a weighing machine? That basically sums that up. So appreciate the question, Steve. Um, Anybody else have anything? Pop into YouTube over here, see if there's any questions on there. Um, Seeing Dave S here. I'm of the belief that today was very important on the daily chart. I agree with you too. Today's really a day to take notice of, especially if you look at that the SPY candle that came in, this IWM candle that came in. I wouldn't be surprised, and it's too early to say this with any confirmation. I wouldn't be surprised if this is the candle that ends the uptrend. And by the way, ending the uptrend does not mean necessarily full on daily chart reversal that brings us back down to 410 in the SPYs. It just means that the uptrend ends. That we could range, we could reverse. I will not be surprised at all if we look in a few weeks or a month or whatever, and we see that this is the candle where things changed. But you're of the belief this is very important on the daily chart, and I'm going to be paying even more than I usually do to it. Right now, I have the 8 and 21 EMA and want to start tracking the 50-day because I think there's a chance that it could get down there in the next month. What's your opinion on the 50-day? Yeah, so I don't have it on this chart, but I also like a 20, a 50, and a 200 SMA on bigger picture charts only, like daily charts and weekly charts only, to get some perspective of trend analysis is really how I like to look at it. I don't have a 50-day on this chart here, but my understanding is that there's a lot of stocks in the market itself right now is um, extended from the 50-day on a percentage basis that's relatively high compared to historic norms, which would just be another, and that, that can continue, but it's an extra layer of probability, I think, towards seeing some corrective action. Yeah, Lathe, every once in a while, some smaller meetups or things like that. We'll put something together. From Tate, how are your covered calls coming along? Yeah, they're all making me some money so far. Is this something you can see yourself doing in the future on swing positions? Undecided. Undecided. I added options on my account for this month, and I'll keep them on next month. Very specifically to take some of these gambles into earnings reports. And then I was like, well, since I'm doing that, let me play around a little bit with some covered calls into my target areas for percentages of some of these swing positions that I have that I would plan on liquidating into those targets. And I kind of just did the math on it, and I have it all in a spreadsheet. And I was like, if, you know, JD as an example rips all the way up to my target, I I would end up making like some relative, like really small number less profit than I would have made had I never sold those calls. So and the math on it was like, if I roll any of them once, then I'd be making money no matter what, even if it got up to those targets, and the stock was like called away from me. Um, and then obviously, if it doesn't get to my targets, then it gives me a little extra P&L cushioning as the stock moves sideways or the stock potentially pulls back. So that was kind of my thought process there. It is putting a few extra bucks in my pocket. Sometimes my targets are so far away that the amount of money that I would get by selling a call didn't make any sense. But for the names that I have on, the math made sense, so I did it. I'm not sure if that's something that I'm going to continue to do past these current positions that I have on. You know, I'm not. I love to learn. I really have a strong thirst for knowledge. Um, if it's trading products or trading strategies that are outside of my edge, I want to learn about it. At the same time, I have to recognize the fact that I know exactly what my edge is in the market, and I'm really good at this point in my career at captivating that edge consistently over time. Capturing that edge kind of consistently over time. And I don't want to make a mistake of overly deviating from what's what works for me. So a little bit of playing, a little bit of experimenting here in July, August, just from a learning perspective is great, especially if it can put a few bucks in my pocket. At this point, between what I'm going to lose on the puts on, Meta, Roku, and perhaps Microsoft versus what I'm going to make on some of the covered calls, assuming that they work, which so far so good, isn't, worth. I'm probably going to be like breaking even on all that. Which, whatever, I said from the beginning, I'm very, very specifically recognizing that I'm coming in, and I'm acting as a gambler on some of these earnings reports, kind of just off of a thesis and a thought process, and wanted to put some money where my mouth is. Um, yeah, thanks, Dave. So that's kind of where I'm at with it. So undecided on if I'll keep paying for the extra data and everything. Past August. Uh, from Robert, what was your morning thought process based on the GDP report with the market gap up? Yeah, so the GDP report came in really strong, and I had no idea how to interpret that, to be honest. I didn't know if the market was going to interpret that as a bad thing because the Fed can continue to keep hiking, or it's a good thing because the economy is so strong. I mean, I feel like we've entered a realm of difficulty interpreting some of these numbers again on if good news is good news and bad news is good news and good news is bad news and all that insanity. Um, so I wasn't giving so much thought, honestly, to the GDP as I was the other stuff that I already outlined in this meeting. It being the day after the Fed, kind of where the market is, studying Meta. That Meta short that I didn't take was money. I think a few of you guys took it. It's great. Called out basically the short in the bull flag. He had this push, this attempt at a push here at 10 a.m. that failed, and then thought this thing could actually really break down. If it lost 320, I thought it would start to really negatively impact the entire market, which is pretty much exactly what happened. All right, looks like I got through everything. If you're on the YouTube, you know what to do. Press the thumbs up button. Everyone else, have a great night. Oh, we got one more question sneaking in from Yishuan. Is it possible to briefly go over some of the important features of Inside 5 and Inside 15? Sure, we can take a look at that. Trying to think if I have any good examples from today that we were looking at. I remember there was one in the morning meeting that was a daily chart that was an inside. I don't remember what it was though. Let me look around. Let me start with some. I mean, I can definitely give you all the theory. I mean, well, we had that IWM, which was an inside day, which is now potentially failing, but we can look at it. So, um, CLF, that's the one, right? Yeah, CLF we had mentioned in the morning meeting. CLF is now 2 inside days in a row here. Uh, yep. Thanks, Pat. Saw that. Um, so inside bars, right? Look, everything we're in an inside day, an inside 5, an inside 15, an inside hourly. They're all examples of inside bars on different time frames. What is an inside bar? An inside bar is a candle that is within today's low of 1703 is higher than yesterday's low of 1690. So today's entire candle stayed within the range of yesterday. And you can, you can also see that on a 5 minute chart from yesterday and today. This is a 5 minute chart of yesterday. This is a 5 minute chart of today. So you can just see that today's price action stayed within the range of yesterday's price action. Interestingly enough, yesterday's price action was also in the range of the previous day's price action. So we have 2 inside days in a row. 2 inside days in a row. We give that a name, a special name. We call that a shooter. 2 inside days in a row. Very simply, and this is an oversimplification, very simply, the way to trade an inside bar is, and this could be, you could take this exact same chart that we're looking at with CLF, and you could make it a 5 minute chart, you could make it a 15 minute chart. It's all the exact same thing. The way to trade it would be tomorrow, if CLF is getting above today's high of 1744. In other words, it's breaking out of the range of that inside day. So we're trading above 1744. You would go long, and your stop loss would be the other side of the inside 5, which is 1703. It's the very simple way to do it. The opposite's also true. Tomorrow, if the stock breaks down, you could short it through the inside day low, through 1703. And then if that triggers and you get short through 1703, your stop loss would be the other side of the candle, which is 1744. So you're taking on 40 cents worth of risk. And again, that's a daily chart, but the same exact thing applies on if you're looking at a 15-minute chart that had an inside 15 candle. That 15-minute candle is within the range of the previous 15-minute candle. Or an inside 5-minute chart, where that 5-minute chart inside candle is within the range of the previous 5-minute candle. So that's the very simplistic way of how that works and how to execute it. Now I need to complicate it for you a little bit. I wholeheartedly promise that if you were to buy or sell the break of every inside candle, 5, 15, daily, every time you see an inside bar, you buy it if it breaks up. Every time you see an inside bar, you short it if it breaks down. I wholeheartedly promise that you will lose money in the long run. So why do we look at this and why does it matter? We like to utilize inside bars, and what an inside candle is a compression of range, right? So you can see here again with our CLF example, 2 days ago, the range really expanded. Yesterday on the first inside day, the range compressed. The day after that, the range compressed even further. That's today. Markets work in periods of expansion and consolidation over time. So the more compression you get, the greater, the bigger the expansion can actually be. But with all that said, again, I promise if you trade every inside candle the way I just described, you will actually lose money in the long run. So we like to use it as an execution strategy specifically for when we like other things. An execution strategy for when we like other things. We like to utilize it as an execution strategy in particular for trend continuation or momentum continuation. Now, trend and momentum are two extremely important definitions that you should have memorized. The definition of an uptrend is a pattern of higher highs and higher lows. The definition of a downtrend is a pattern of lower highs and lower lows. The definition of momentum is the greater the price, the greater the demand. It's extremely important to really understand those concepts because pretty much every trading concept that we have in technical analysis is going to be based off of the concept of trend and momentum. So it's extremely important to know that. And again, I wish I had some better examples. From today, use. Let me look at like the IWM or something that trended a little bit better down. I'm not seeing anything I love here. Not seeing anything I love here as an example. Examples will come up though. I wish I had a good example from today to show you. I just don't. We will find a really good trending stock, and I'll remember to highlight it in an afternoon meeting about how you could utilize an inside bar for continuation. But generally when you're looking for trend continuation, you got this pattern. Let's just say it's an uptrend of higher highs and higher lows. So that's a period of time in which stock goes up a little bit too much. Sellers come in at a pivot high, and they pull it back for a period of time, and then buyers regain control at a higher price. Where the sellers are usually able to pull it back to and where the buyers are usually able to regain control is generally in our equilibrium area, our technical equilibrium area. We consider technical equilibrium for any stock or market that we're looking at to be the space between the 8 and 21 EMA. That's technical equilibrium. So you can even see here, not the best example in the world, but when the IWM started breaking down after 1 o'clock in the afternoon today, you had a big move down, and then the market went sideways. When the ADMA caught up, you had this pivot high, and then we took another leg. We got a little bit extended to the downside. We bounced back to the ADMA. We created this pivot high via a continuation shooting star candle. Broke down a little bit. Here's actually an inside five, but there's too much extension, so the inside five actually breaks up, and that creates the pivot, and then gives the trend continuation. I like to look for my favorite trend continuation setups are the continuation hammer for an uptrend, or continuation shooting star for a downtrend, or the inside and up or inside and down for an uptrend and downtrend respectively. I don't have any examples of an inside and down here. I want them to happen generally in this equilibrium area. So this candle right here at 220 is a great example of a continuation shooting star where you get this upside tail into the ADMA that represents a pivot, and you could go short versus that high. You do get this inside five here at 240, which could have broken down. This could have been a short if it broke down. It didn't break down. It broke up first before it broke down. That negates the trade. That makes it no trade. But if that inside bar had happened a little bit closer to equilibrium, then maybe that could have broken down, and that actually would have made a better execution setup for trend continuation. So that's when we were like those inside fives. But I think that we communicate them enough during the trading day today, or every day, I should say, that if you now understand, Yishuan, the concept of how inside bars work and how we use them as execution strategies for when we like other things, you can pay attention during the trading session when I'm on the radio or people are typing into the VTF, and especially in the beginning of the day where a trader might communicate an important inside candle, and then you can study and watch how that trader may choose to utilize that candle as an execution strategy and why they're communicating it. And also, don't be afraid to ask questions. And I appreciate that you asked this question. I see it barely snuck it in right as we were finishing up. Don't be afraid to also ask questions during the day. So if you see me communicating, hey, there's an inside bar here, don't be afraid to be like, Derrick, why do you like this inside bar? Or also communicate and be like, hey, look, everyone, there's an inside bar in Apple, and then I'll give you feedback on why I do or do not like trading off that inside bar, and that's going to be the best way for you to continue to learn. So I appreciate you asking the question in the afternoon meeting. This is the best forum for longer format answers to questions. Also, though, utilize the virtual trading floor during the trading session, and maybe not for a longer format question like this one, but just like a real quick, like, hey, Apple just formed this inside 15. What do you think? Do you think we should trade it? And I might say, hey, this looks great. I'm gonna get involved, or I think it looks good, but I'm gonna pass on this one, or I don't like it for the following reasons, and that's gonna be the best way for you to learn. So keep it up. All right, gang, I'm gonna wrap it up for today. Oh, I see Robert trying to help me out with some inside bars real quick. Hold on. Boeing gave an inside 5 at 10:05 on the YouTube. Yeah, here's two inside fives. I like this. This is actually creating like a bull flag for continuation of this break higher, which is also trend continuation over the course of the last couple of days. This is also actually a shooter, two inside fives in a row. The second one is one that you could have executed to the upside. Rivian yesterday. Oh, Rivian, yeah, that's the one that we all traded. Um, Rivian here, this is an example of momentum continuation. You had really big volume coming into Rivian, two really big bars in a row. You get 1 5-minute bar of rest. You take that inside five to the upside for continuation. So it's a couple examples there. Thank you, Robert, for pointing that out in the YouTube. Have a great night, everybody. See you all tomorrow.